All right, guys, so we're finally here. We're at the strategy lessons. So in this video, I'm going to explain the first strategy. Strategy number one, initial breakout or IBO. Okay, so the initial breakout strategy or IBO is it's a basic strategy. It is the first strategy I have ever learned from Lewis Mocker at Infinite Prosperity, and since then I have fine-tuned it and changed it around and kind of made it my own, utilizing again this multi-time frame analysis principle. When I started learning about the strategy, I was only utilizing literally just two time frames, the daily and the 1 hour, okay, and then the 5 minute for entries, but for timing the entries. But the daily and the 1 hour, that's all I ever used at the beginning, okay. Over the years, I ended up literally fine-tuning it to the point where I started adding the 4 hour time frame. I have created now an IBO A, B, and C, which they're three totally different IBO type of setups, and all three of them have their risks and also their benefits. So I literally have fine-tuned this strategy as much that I can at this point, literally, at least that's how I think, you know, because I have spent this strategy, I traded the longest, you know, I have fine-tuned it the most out of all of them, and I believe it's a basic strategy, but it's one of the most common strategies out there as well. You're going to see it all the time. Okay, so in this lesson, I'm going to focus more on the explanation of this strategy. I will jump on the charts. I'll show you a few examples of how this strategy is played out, a couple day trades, you know, a swing trade example as well. And because like I said, these strategies, all of them, they can be applied to swing trading or day trading. It doesn't matter because they are based on multi-time frame analysis. So you can take the monthly, weekly, daily chart, apply the strategy and be a swing trader, a long-term trader. You can take the daily 4 hour, 1 hour time frame, apply the strategy and be a short-term trader, okay? Or you can apply it to all of the time frames monthly to the 1 hour and be a day trader, but with a longer-term bias. You know, really kind of maximize on your returns. And I'll be explaining all of this as we go through the lessons. You know, after the strategy lessons, we're literally going to be hitting on management lessons, and that's where it's going to also get exciting as well. And those are going to be extremely important lessons. But for the initial breakout, the IBO, okay, what is it? Literally, it's this. Rejection of a daily time frame, or some kind of a rejection on a higher time frame. Let's just say that a rejection on a higher time frame. So imagine you have a deceleration, okay, at some kind of support and resistance. So deceleration, support and resistance, and a rejection of that support and resistance on that higher time frame. So you believe that a new run or pullback is beginning, period. Okay, so you're catching the beginning of that run or the beginning of that pullback. And this initial rejection is extremely important, you know, because if it looks weird, if it's not a good rejection, if it doesn't have room to go, and I'll explain what room to go is, you know, room to go pretty much means that when you're taking the trade, there has to be room for it to breathe, to move, to fully kind of like literally to fully, just move. You don't want to be trading right into resistance or right into support and kind of choking the position, you know? And I'll explain that exactly on the charts. But the first thing that you need, like I said, is a really good rejection of some kind of support and resistance level, okay? And it has to be so good that you believe a new run or a new pullback is happening. The second thing that you need is the first sign of a trend change on a lower time frame, okay? So first sign of a trend change will be the break and retest of the 1 hour 50 EMA or the daily 50 EMA, depending on whether you're a swing trader or a day trader, okay? But it's the break and retest of the 50 EMA. That's the confirmation, okay? So the higher time frame gives us the rejection, the reversal candlestick, and we believe a new run is forming, okay? The lower time frame gives us that confirmation by breaking out and then coming back to retest the 50 EMA, okay, which is our first sign of a trend change. So this is literally, it's a basic strategy, and it catches the very beginning of a run. So because it catches the very beginning of a run, you can literally maximize on your returns because you're getting in early, okay? A lot of times you're getting in before everybody else. So without wasting time any farther, let's jump on the charts and I'll show you exactly what I'm talking about. Make sure to take notes, write down exactly what is required for the strategy. I will be breaking it down, so take notes. And again, in the next lesson coming up, we'll be focusing on the entries, the targets, and the stop losses when it comes to IBO and strategy number 1. Okay, so this lesson is the explanation. The next lesson will be the entries, the stop loss, and the targets. So with that said, I'll see you guys on the charts. All right, guys, so we're finally here. We're in the strategy lesson. So in this lesson, strategy 1, initial breakout, we're actually going to just talk about the explanation. What is the initial breakout? What should it look like? Okay, and in the next coming up lesson, we're going to talk about the entries, the stop losses, and the targets. We'll talk a little bit about that here, but we'll mainly focus on that in the next lesson. For now, we need to really define what is an initial breakout, the IBO. What is the IBO? Okay, so I highly recommend you guys get a piece of paper, pen, take notes. However you take notes, make sure you take notes right now, because this is the guideline. You gotta have to write down what is required for an initial breakout. Okay, so I'll go point by point and you guys write it down and make notes, make a lot of notes. So the initial breakout, we're gonna look at an example of a trade I took and go back to euro dollar at the beginning of 2018. Okay, so the first thing for initial breakout, you need to have a bias in a specific direction, okay, on a higher time frame. So this is going to be a day trade. It's not going to be a swing trade. We'll look at a swing trade later, but this is a day trade example. So we have to have a bias on a higher time frame. So since this is a day trade, pretty much it's daily down. So we're mainly going to be focusing on the daily down, okay? But you also have to look at a higher time frame to kind of determine how much potential is there, okay? And when it comes to this, we'll have more lessons after the strategies that kind of touch on how far you should take a run, okay? How far you should trade it, where you should place your target, okay? There's going to be a follow-up lesson after the strategies that's based on that alone, okay? So we're not going to focus much on that, but the strategy itself, you have a rejection on a higher time frame. So this strategy is being applied to day trading, so daily down, okay? So do we have a rejection? That's the main thing. Now, this setup doesn't have a beautiful candlestick formation, but the trade happened right there, okay? Right after this day on Monday, January 8th, okay? That's where the trade happened, on Monday, January 8th, okay? Now, on the daily chart, it doesn't seem like much. We are decelerating. There's the previous highs, so we got resistance in that area. If you go to the weekly time frame, you'll notice that, and you zoom out on a weekly chart, that at that point, we're also forming like a double top on a weekly chart, and we do have historical support and resistance there. So this support and resistance is also on the daily chart. It's just you would have to zoom out all the way to 2013, 2010, right? But we do have pretty good support and resistance, horizontal support and resistance in that area. Okay, let's see if it goes any farther. And there's like a few more hits right there. Okay, so it is at a good level and it does have rejections. So why is this only a short-term play? Well, it's a pullback play. Okay, pullback play on the daily chart mainly because the weekly time frame, it's only a double top. It's still trending upwards. You see, we just had a breakout on a weekly higher low, we're still moving up. So even though we're sitting at resistance, it's only a daily pullback. We don't have a daily trend change, nothing like that, so it's only a daily pullback. So the first thing to find out for initial breakout is, do we have a good rejection? Okay, is the daily chart, or is the higher time frame, in this case the daily, rejecting a good level? So in this case, we do have a good horizontal level. It is rejecting a good horizontal level, okay? But that's about it. It's rejecting a good horizontal level on a weekly and on a daily. We have a double top on a weekly, and the daily chart has deceleration. So we do have a rejection of that horizontal level, okay? So that's the first thing you need to have. So the first question you need to ask yourself, is the daily chart, or is the higher time frame, if you're a day trader, the daily, if you're a swing trader, a higher time frame than that, weekly or monthly, is the higher time frame rejecting a strong support and resistance level? In this case, yes, we do have that. Next thing you need to identify is which phase of the market that this is in. So it's in a pullback. That's it. It's a pullback play. It's not, we're not with the trend because we're moving higher high, higher low, higher high. Even though we're sitting kind of at the highs, you know, we don't have trend confirmation right here. We don't have a bearish price action right here at this point. At the time of the setup right there, all we really had is higher highs, higher low, higher high, right? And then we're playing this pullback. So it's a pullback. It is a pullback play. Do we have higher time frame confluence? Not really. Maybe a tiny bit on a weekly, but not really. Nothing on a monthly, you know? So it's simply just a day trade. It's just a quick trade, okay? So that's the first thing. First thing is, do we have a daily rejection? Yes or no? If the answer is yes, it's a good rejection. Now we dive into the intradays or the lower time frames, okay? 1 hour chart. On the 1 hour chart, the initial breakout will give you a break and retest of the 1 hour 50 EMA, okay? But we need to stock up more confluence factors. So do we have more resistance at that 1 hour 50? Let's see, okay? So let's draw in a trend line. Connecting the open and close. And there it is, you know, so we got a trend line in that region. 1, 2, 3, kind of fourth, and this is a breakdown and retest of the trend line as well. Do we have 0.32 Fibonacci? Let's draw that in. You know, when you're considering of taking a trade, see how many confluence factors it has. You know, does it have a horizontal level? This one doesn't really have a horizontal level in there, you know, but it does have a trend line. It does have the 1 hour 50 EMA. It does have the 0.32 Fibonacci retracement level, right? So it has all of that. And then that's kind of it. And it has bearish MACD divergence as well, so you can see that. So the initial breakout is the break and retest of the 1 hour 50 EMA, period, okay? If we're looking at a daily chart, it will be break and retest of the daily 50 EMA if you're looking to target the monthly run. And here, we're just targeting the daily pullback. So we're looking at the daily pullback. We do have a rejection. The next thing is drop down to a lower time frame. Do you have confirmation? Confirmation here is the breakdown and the retest of the 1 hour 50 EMA, okay? 4 hour chart, let's look at that. So it's the middle time frame. Do we have any confirmation on the middle time frame of a bearish move? And if you look at the middle time frame, we do have a double top, okay? So we do have a double top and the entry came in right there. Okay, let me put in arrows for the entries. Entry is right here. And on the 1 hour chart, the entry is right there, okay? Right after the rejection. So on the 4 hour chart, we have double tops. So now when you kind of look at the whole picture, the daily chart has a rejection of a pretty good horizontal level. The weekly chart is giving us a little bit of confluence because it was kind of stalling at that horizontal level at the time of the entry, okay? But it's a pullback play, so it's just a quick opportunity. It's nothing long term, it's not a big play, it's just a pullback. So we just want to get in and get out. Quick day trade, okay? So question 1, do we have a rejection? Yes, we do. Step number 2, do we have a 1 hour trend change? Do we have the 1 hour break and retest of the 50 EMA? That's the most important thing. Do you have a break and retest of the 50 EMA on the lower time frame? Okay, in this case, the 1 hour chart, we do. Okay, break and retest of the daily of the 1 hour 50 EMA, it's there. The 4 hour chart, okay, the 4 hour chart will always look like this. It will always, if you're going short, it will always be above the 4 hour 50 EMA. Okay, so we're going short here, so it's always going to be above the 4 hour 50 EMA. The IBO will always be above the 4 hour 50, okay? Or if you're going long, it will always be below the 4 hour 50. So we're going short here, so it's above the 4 hour 50. So the negative with an IBO is that you're trading directly into the 4 hour 50 EMA, okay? So that's the risk with an IBO, is that you're trading directly into the 4 hour 50 EMA. So a lot of the times we'll be taking our profit on that 4 hour 50. And if you zoom out and kind of draw in the trend line, you'll notice that the trend line also lines up at the 4 hour 50 EMA right there, okay? So let's quickly go through it again. Daily needs to have a rejection. We do have that. You need to believe that a new run or a new pullback is beginning. Okay, so we do have that. We do have that rejection, and we believe that a pullback is beginning. Okay, the 1 hour chart needs to have a break and retest of the 50 EMA. We do have that. The 1 hour chart does have a break and a retest of the 50 EMA. Then we look at, do we have other confluence factors? Does 0.38 Fibonacci line up? It does. Do we have anything else? Do we have a trend line? Perfect. The more support and resistance levels supporting your entry, the better, you know? So we have a lot of resistance levels protecting our entry, okay? So that means there's a lot of resistance there. We got the 50, we got 0.382, we got the trend line. Great, that's exactly what we want, okay? But the second point is the break and retest of the 50 EMA. So we got that. On the 4 hour chart, we just need some kind of confluence, okay? Some kind of bearish confluence. Well, in this case, we got the double top, okay? The risk is you're trading into the 4 hour 50. That's always the risk with an IBO, always. You know, it will always be a risk. The risk is you're trading into the 4 hour 50. Okay, so how would I execute this? It's a short position, okay, but it's a short-term position as well. And again, we're going to be focusing on the entries and exits in a second in the next lesson. But for now, the entry will be right here on the breakdown, targeting the 4 hour 50 EMA. So in this case, you'll just be targeting pretty much 30 pips. I like even numbers, you know, so I don't do like 31 pips or 32 pips. I do either 20 pips, 25 pips, 30 pips, 35 pips, you know. It would be a 1-to-1 trade. So my stop loss would be like that. Okay, so this would be my entry. This is what it would look like. So we have the rejection on the daily time frame. We have the break and retest of the 1 hour 50 EMA. The 4 hour chart does have bearish confluence with the double tops and the strong MACD divergence. Okay. On a 1 hour chart, we also have the trend line acting as resistance. We have 0.382 Fibonacci acting as resistance. Okay. On a 5-minute time frame, you got the pivot. Okay, so we're going to use the pivots here for these examples, and I recommend you guys toss the pivots in as well. You can remove the pivots, and like I said previously when we looked at indicators, I said you can remove the pivots and just trade off of 0.382 Fibonacci. Okay, but it's just an extra confluence factor, so let's just keep it in here for now. And if you guys choose to remove it later for yourself, feel free to do so, because like I said, you know, you're focusing on this rejection of the 50 EMA and 0.382, you know, so you don't really need it. But it's just an extra confluence factor, so let's keep it in there. And then the trade happens. Okay, so that's the criteria. That is the IBO. The main criteria for an IBO, again, a rejection on a higher time frame, and you need to believe that a new run or a new pullback is happening. So you use your technical skills that we already learned, you use your multi-time frame analysis, and you decide, does the daily chart have a good rejection? And does the daily chart have a pullback or a run? Is the pullback or a run beginning? In this case, yes, the pullback is beginning, and we have some weekly confluence there as well. Then you use multi-time frame confirmation. Okay, does the 4 hour chart give us some bearish confluence? Yeah, we got a double top. Okay, but the main thing is the 1 hour chart. Does the 1 hour chart confirm that rejection on a daily chart? Yes, it does. We do have multi-time frame confirmation because the 1 hour chart does give us this breakdown and a retest, right? So we do have that confluence. Now, what is this? Think of Elliott waves. Wave 1, breakdown. Wave 2, pullback. We're catching the wave 3, right? So this is Elliott wave patterns too. Wave 1, breakdown. Wave 2, pullback. Wave 3. That's what we're catching. So great, you know, and then you take the entry. So let's look at other examples as well. You know, we'll focus on this entry, the entry, the target, the stop loss. We'll focus on that in the next lesson, okay? But for now, I just want you guys to get a feel for what an initial breakout is, and this is kind of what it looks like, all right? So let's move on to the next trade. All right, guys, so in the second example, again, we're gonna have a look at another initial breakout, another IBO, okay? So let's go through the criteria again. For IBO, you need a rejection on a higher time frame. You need to believe that a run is beginning or a pullback is beginning, okay? And you need a break and retest of the 50 EMA on a lower time frame, such as a rejection on a daily, break and retest on the 1 hour chart, okay? Or a rejection on a monthly, break and retest on a daily chart, okay? So we'll have a look at a swing example later, but for now, again, let's focus on the day trading example. So a rejection on a daily, break and retest on the 1 hour time frame, okay? So in this example, we're going to look at Euro ASI short. I took this trade back at the end of March, at the end of March 2018. And it's a good example, but we're stuck in confluence factors here. So the trade happened right on this day. It happened right on the 29th of March, okay? Right there. So if we make this larger, you're gonna notice we had a bearish engulfing reversal, okay? It's a pullback play. It's a pullback. But what is it rejecting? Is it rejecting anything? And do we have higher time frame confluence? First of all, we do have higher time frame confluence, because at that time, we're rejecting this horizontal level on the monthly chart. So that's a resistance. So we do have resistance in that area, you know, in this general region. And we're sitting at the double top levels on a monthly chart. And at the moment of the entry, we're stalling and rejecting double top levels. So eventually this could go down all the way down to here on a monthly chart, okay? But we don't have lower time frame confirmation yet, because you look at the weekly chart, it's just a pullback. You don't have bearish price action here. We're trending upwards on a weekly chart. But we do have confluence for the short-term position for this pullback play, you know, because the weekly chart also has got resistance in that region, you know. And the weekly chart at the time of the entry was developing this high test reversal, this bearish high test reversal, you know. So it is at kind of at the end of this potential trend, you know, wave 1 breakout, wave 2 pullback, wave 3 run, wave 4 pullback, wave 5 run, right? So it is at the end of this trend, but we don't have a trend confirmation yet. There's no double tops, there's no lower high, you know, so it's just a pullback. So it's a pullback on a weekly. But we do have confluence. We do have really good confluence. So this is a really good trade. The more confluence you can stack up like that using multi-time frame analysis, the better. You know, the minimum is that we have a daily rejection. That's the minimum for a day trade, is that you have a daily rejection, daily confluence. But if you can stack up weekly confluence and monthly confluence, then that makes it an even better trade, right? Now the daily chart is, we have the same resistance there. The daily chart is also a pullback. We don't have a trend change here. We don't have double tops. We don't have a lower high. We don't have head and shoulder patterns. So it's also a pullback. So the entry is happening here, but we do have a rejection. We do have a reversal candlestick, you know, so we do have resistance in that area, as we saw on a weekly and as we saw on a monthly, right? And in this case, we do have a reversal candlestick, which is important. You know, you want to make sure that the daily chart is rejecting some form, you know, so we do have a bearish engulfing reversal rejecting that resistance that we saw on a monthly and a weekly. Plus we have a weekly high test developing, plus we have really good horizontal resistance as seen on a monthly, you know. And in the previous example, I only took a quick one-to-one position because I didn't really have anything on a higher time frames, okay? But we do have really good resistance here. So in this case, we also have a really good reversal candlestick. We have this bearish engulfing, whereas in the other example, it was kind of weak, you know. So in this case, this is more of a longer term trade. Not a longer term trade, but I'm targeting the run here. So I'm going to be targeting the 20 EMA in this case, because I believe personally that there's a little bit more potential here due to this weekly high test and such. You know, at that point it was developing as a high test. So I believe that there was a little bit more play here. I don't want to push it down to the weekly 20 because again, the daily chart doesn't give me any confirmation. It's just a pullback on the daily. If the daily gave me, guess what, a double top, then I would have pushed it to the weekly 20 EMA. But I don't have a double top on a daily chart. The daily chart is just a pullback, okay? So I want to treat it like a pullback. And again, we're going to have other lessons after the strategies that kind of explain how I do this, okay? Explain this a little bit more in a little bit more detail. But for now, let's just focus on the strategy itself, you know? So we do have the rejection, and we do have a bearish engulfing reversal, rejecting resistance. We do have higher time frame confluence as well, which is great, you know? And because of the higher time frame confluence, I'm looking to push just a little bit farther. Instead of just a one-to-one trade, I'm going to see how far I can get by targeting the 20 EMA. Okay, that's what I typically target on the pullbacks. I target the 20 EMA on a pullback. Okay, only if I have higher time frame confluence. Otherwise, it's just a one-to-one trade like you've seen in the previous example. Okay, so this is good. I like it. Next step is what? Do we have a 1 hour trend change? Okay, do we have a trend change on a lower time frame? Do we have a break and retest of the 50 EMA? Okay, so the trade happened right here. Okay, this is the 29th. Okay, and at that point we did have a break and retest of the 1 hour 50 EMA. Perfect. We broke down, came back for a retest. So let's do our analysis. Okay, so what do we have? Because we want to stack up as many confluence factors as we can. Trend line. Do we have a trend line? connect the lows, and boom, beautiful trend line. Okay, so not only do we have a break and retest of the 1 hour 50, we also have a break and retest of this 1, 2, 3, 4, and breakdown, retest, 5 touch trend line. Remember what acts as support, once broken will act as resistance. Do we have Fibonacci retracement, 0.382? Typically 0.382 will line up. That's something we'll pretty much always have. So we do have Fibonacci in that area. Okay, great. Fibonacci is there. 4 hour chart. How's the 4 hour chart looking? Well, the 4 hour chart at the time of the entry didn't have that much confluence. Okay, but we did have kind of like a small weird looking wedge. We did have bearish MACD divergence. Okay, we also have bearish MACD divergence on a 1 hour chart, a tiny bit, not much. Right here, you know, so we're just stacking confluence factors before we take the trade. But the criteria is already met. You know, the criteria is already met. But the better the trade, the more confluence factors we have. Period. You know, that's just what it is. The more confluence factors we have, the more resistance levels, the better the price action, the better the setup. The strategy already fits. We have a break and retest of the 1 hour 50 after a daily rejection. Strategy fits. But we want to make sure that we're good to go. You know, we want to make sure we use our multi-time frame analysis skills to actually make sure it's a good setup. What else do we have in this area? We have a little bit of resistance too. High, support, and we have resistance right there. Okay? So on the 4 hour chart, this would classify, the other example was a better 4 hour time frame because we had double tops on a 4 hour chart in the previous example. In this example, we do not have that. This will be an IBO, initial breakout B, okay? So I'll explain the 3 initial breakouts in the part 3 of the strategy 1 lessons, okay? But this will be an IBO 3, or sorry, an IBO B, okay? The previous one, which had 4 hour double tops, was an IBO A, and that's something you guys will learn shortly after in the next, not in the next lesson, but in the lesson after that when we do strategy 1, part 3, okay? I'll look at these 3 different variations. But in this case, we do have a little bit of bearish confluence, you know, meaning that we broke the phase line or the trend line, and we kind of came back to retest that trend line. Okay, so we do have a little bit of confluence. Now, the trade looked like this. I ended up using an entry order on this, okay? And it was on the break. Let me actually zoom in to the entry. And in the next lesson, we'll have a look at this exact same example, and I'll tell you exactly why I placed an entry order. But there was a live entry as well, you know, but I just went with an entry order here. And stop loss at 0.75 fib. So the entry order looked like this. So I had an entry order at 61. Stop loss was 55 pips. Okay. And my target was at, let's confirm, the 20 EMA, and the 20 EMA was 59.5, you know, so 59.5 was my target. That's the 20 EMA. So 59.5. Okay, so that's my target. 150 pips and a 50 pips stop loss. 2.7 reward risk ratio. Okay, so that's what it looked like. I placed that entry. You know, the trade happened again. This was an entry order, but there was a live entry here as well, and I'll show you guys that in the next lesson when we look at the entries and stop loss and targets in a little bit more detail. And eventually this ended up moving down and hitting that target, hitting that 20 EMA a few days after, you know, for 2.7%. So let's summarize real quick, you know, for this example. Do we have a daily rejection? Yes, we do. We have resistance there as seen on a higher time frame, and we have a bearish engulfing. However, it's a pullback play, you know, so just a quick opportunity. Do we have higher time frame confluence? Yes, we do. We do have this weekly high test kind of developing at the time of the entry. You know, we do have weekly resistance there, the previous highs. You know, we have monthly resistance, which even goes farther, really good monthly resistance in that area as seen right now. You know, so we do have higher time frame confluence. because we have higher time frame confluence, and because the daily chart at least has a really good reversal, which is this bearish engulfing. Because of that, I chose to take it as a more of a longer term position, targeting the 20 EMA instead of a quick trade as you guys seen in the previous example, because the previous example didn't have this. It had a rejection, not as good, okay? So I only took a quick 1-to-1 down to the 4-hour 50. But with what I'm seeing here, I'm confident, you know, in my analysis here. So because I'm confident and I believe there's a little bit more room than just a quick little move, then I'm targeting the 20 EMA, okay? So we do have that. The first criteria is met. We do have a rejection on a higher time frame, and we believe a new run, or in this case, a new pullback is beginning. The next step is the lower time frame, such as the 1-hour chart. Do we have a break and retest of the 50 EMA? And right away, the example is yes. You know, we do have a break and retest of the 50 EMA. Well, plus we have other confluence factors. We have the trend line. We have 0.3 to Fibonacci. We have a little bit of horizontal resistance as well. You know, pivot is in that area. The 4-hour chart, do we have any bearish price action on the 4-hour time frame? In this case, not so much, okay? But we did have a break and retest of the trend line as well. We did get squeezed out to the downside, plus bearish MACD, okay? So you see why I always target, why majority of the time I target the 4-hour 50? Because look, it paused. It stalled on the 4-hour 50 EMA, you know? But because there was higher time frame confluence, it went a little bit farther because of the higher time frames, right? But the criteria is met. So that's it. You know, that's again an example of an initial breakout. Look at the 1-hour time frame. It even developed a head and shoulder pattern, right? So this is an example of an initial breakout. Second example, we're gonna have a look at more of them. And in the next lesson, I'll talk more, look at the same example and talk more about the entry, more about the stop loss, and more about the target in more detail. So that's it for this example. Let's have a look at the next one. All right, guys, so now we're going to look at the third example, and this is one of my favorite trades from 2018. It is actually one of my all-time favorite trades, and it's a really good one. And I made a lot of money on this trade. I made a lot of profit on this trade. It's one of the largest trades I have taken, but I also have missed out on a lot of profit on this setup as well. And I'll explain exactly. We'll be looking at this setup a few times throughout this course. We already looked at it a few times at the beginning of this course during the basics when we were looking at support and resistance levels and such. Again, this is pound dollar. So you've seen it. You've seen this analysis a little bit. Okay, so now I'm actually going to walk you through the setup that I executed on this trade. It was using the strategy, the IBO, the exact same strategy that we've just been learning. Okay, and it was a massive trade because of the higher time frame bias. Okay. So let's dig into this a little bit, okay? So the trade was taken, again, this pound dollar short from April 2018. The trade was taken right at the top here. It was taken on April 18th, okay? So right after this bearish high test reversal. Let me make it larger. Right there, okay? So right after the bearish high test, that's where the trade was taken short, okay? Right there. And let me walk you through the whole analysis. So what's the first thing we need to know for the initial breakup? You guys know it. What's the first thing we need? We need to believe that a run or a pullback is beginning, okay? So we need a rejection of some kind of support and resistance level, okay? That's what we need. We need a rejection of some kind of support and resistance level, a good rejection, because we need to believe that a run or a pullback is beginning now, not later, not tomorrow, not a week from now, now. Okay, that's what we need to know. We need to know that the run or pullback is beginning now. And we want to be able to catch it right at the beginning. Okay, so what do we have here? We got a bearish high test reversal, but do we have resistance? Okay, well, let's dig into this analysis further. So the analysis on this setup started on the monthly chart. That's why this was one of my biggest trades ever, and specifically one of the biggest trades this year so far. And that is in 2018, and that's simply because the analysis started on the monthly time frame. You know, that's the significance of higher time frame analysis, is because again, this is a setup that I've been waiting for literally months for it to develop, because I was ready for it. I knew that a massive move on a monthly time frame is coming simply because of this resistance, only because of that resistance. Look how strong it is. Right? So it acted as massive support back in 1996. 1986, then again, and it hasn't been broken since 86, and finally we broke it here back in 2016 when we crashed down to the downside, and this is the first retest. Okay, so when price action started to reject this horizontal level, I was ready for a short position. I was waiting for a short position. Okay, on top of that, what else do we have? We have 0.32 Fibonacci retracement there, and we have the 50 EMA. At the time of the entry, price action was sitting a little bit higher, so we didn't have this reversal candlestick formation, this high test at the time of my entry. But this is where price action was sitting at. Okay, using multi-time frame analysis, this is where it was right at the highs. So I knew that if I look for lower time frame confirmation for bearish price action on lower time frames, I'll be able to catch potentially a massive short position to the downside. And I only caught a fraction of it. I missed out on so much profit that it's crazy, but I still made a lot of profit on this setup, and I'll show you exactly how. But that's where the analysis started off, okay? Then it continued onto the weekly chart because, again, let's tie in this multi-time frame analysis, right? So monthly run is beginning. I believe that the rejection is happening, and I believe that a run is beginning, okay? On a weekly time frame, we have the double tops at that same moment, okay? Same resistance, it's the same horizontal support and resistance level as what we saw on the monthly. Same area, a little bit lower it should be, like right there. So same horizontal level as on the monthly. Okay, so the weekly chart is rejecting it with this double top type of setup. Okay, and again, I was taking the trade right from the highs because I believed that a rejection was happening. Okay, then now we take it a step farther, and the daily chart, this is where the daily chart, again, we have support and resistance in this area. Okay, so it looks like the highs are right here. But again, to me, what this is a false breakout. Okay, there's a thing called a false breakout. It means that you have a strong horizontal level and then price action just breaks it and then immediately gives you a reversal candlestick, like in this case. So it broke it and then immediately turned around, giving me this bearish reversal candlestick. Okay, and at that point I'm like, yep, the move is happening to the downside. This is the time for me to enter. And this is where I entered, So I entered right after that, believing that a massive move to the downside is happening, and I caught it. And I took profit right here based on an intraday exit, intraday management strategy, and I made over 6% on this setup, from this entry up here down to the bottom here, I made 6%, and I still missed out on a lot. So with that said, when we look at it overall, does our first criteria meet? Do we believe that a new run is beginning? Do we have a rejection of certain levels? So that is a yes. Plus, we have higher time frame confirmation. So to me, I believe that not only is a daily run beginning, but a weekly run is beginning, and specifically a monthly run is beginning. And because a monthly run is beginning, this will eventually turn into a daily trend and cause a massive move in the market. Okay? So that's kind of how it started off. So now let's have a look at the strategy itself on the lower time frames, because criteria 1 is met. We have a rejection of a strong area, okay? So that is met. So the next criteria is, do we have a trend change on the lower time frame? Do we have a break and retest of the 50 EMA? And the answer is yes. The trade happened right there, okay? So let's zoom in, and I'll show you exactly how this entry looked like. So first of all, when we look at the 1 hour time frame, this is where it happened. It happened on the break and retest of this 50 EMA. So it broke it and then kind of came back to reject it, and then boom, started accelerating to the downside. So this is that break and retest, okay? And let's stock up more confluence here, because you can see that once we start adding a little bit more to it, it's going to give us a little bit more confluence. So drawing a trend line, and right away we also broke a trend line, okay? A key trend line that price action has been holding this entire time. Okay, 3 rejections, and then finally we ended up breaking it to the downside. Okay, what else do we have? Do we have anything else? So let's draw our Fibonacci retracement, see how that lines up. And Fibonacci didn't fully pull back, pulled back a little bit. Let's zoom in, and it just kind of rejected it. right here. So we just have a rejection kind of 0.32, but it doesn't perfectly line up. And I'll explain that in a second, why it doesn't perfectly line up and I still took the trade, okay? It's very important. But to me, this is still an initial breakout to the downside, okay? This is that initial break of the 1 hour 50, but most importantly, in this case, it's also the initial break of that ascending trend line that we just saw, okay? And the entry happened exactly right there, so that was my entry point. So now let's have a look at the 4 hour time frame and see what we had there. So on the 4 hour chart, when we zoom in, again, let's draw in a trend line, same trend line that we kind of witnessed on the 1 hour time frame. It's right here, so it broke it to the downside. And it doesn't give us like a full trend change, but to me this was kind of significant because we had this 4 hour high test reversal, So even though we didn't have strong bearish price action, we had this strong 4 hour bearish reversal. And guess what that was rejecting? That was rejecting those higher time frame levels, right? That was rejecting those monthly levels. So when I saw this 4 hour high test reversal, the double doji and this bearish high test, and then the breakdown started to occur, I was hooked because this was a setup that I was waiting for a very long time, and everything, as you saw from the higher time frame, started to play out perfectly. So I wanted to include this trade here because from an intraday point of view, it's not perfect. The other setups that we saw had a little bit of a clearer intraday breakdown on that 1 hour time frame, but if I waited for a clear intraday breakdown, I would have missed an amazing and massive opportunity in the market, So sometimes, once in a while, there's going to be setups that line up so perfectly on the higher time frames, okay, that are so great on the higher time frames that there's so much potential that you might be comfortable with a little bit more risk, okay? And because of the potential that I saw in this position due to the higher time frames, I was okay with a little bit extra risk on the lower time frames. It's not something that I'm going to be doing all the time. This is going to be like maybe 5% of the time, maybe even less. Once in a while, I'll take a position that is a little bit riskier on the lower time frames just because of how much potential there truly is for that specific setup, So initial break and retest of that 1 hour 50 EMA, check. We have it. So it is an IBO, and it is an initial breakout setup. It does meet the criteria. It's not the most beautiful one from an intraday point of view, but it does meet the criteria, okay? So that's why I took the trade short. Now, let's have a look at that entry. Because it wasn't perfect on the lower time frames, I did not place an entry order, okay? So I ended up taking a live entry. And a live entry, again, you guys know it. We'll talk more about it in the next video where we break down the entry criteria and the stop loss and all of that. So we'll talk more about it there. But this is how my entry looked like, so it was taken right here with a 55 pip stop loss, and I ended up taking I exited exactly at 337 pips, okay, so that was my exit, and my entry was exactly, let me just put it in, 4296. Okay, so that was my exact position sizing for this setup. Okay, that's how I entered it. And that's kind of it, So again, know that there will be these massive opportunities in the market, but also know that when an amazing setup happens that you've been waiting for a very long time, but it might not be fully perfect, okay, still you could consider taking it. However, don't do that all the time. Don't settle for mediocrity all the time when it comes to trading, because that's not going to work out too well. I took a little bit more of a discretionary setup on this because this was a massive position. I was looking to make a lot of money on this trade simply because of the higher time frames. It's rare that we get a beautiful monthly chart like that, So I was okay with a little bit extra risk. So that's why I just wanted to talk about that. The criteria for an IBO is here, which is the rejection on higher time frames and the initial break and retest of that 50 EMA, right? And we have some extra confluence factors like this break of this trend line as well, and strong acceleration on the 5-minute time frame on the entry point. But, there's a little bit more to it as well when it comes to discretion, so I wanted to talk a little bit more about that discretion side of things. And with that said, I'm going to pause that right here, because again, we're just digging into the example here of the explanation of what the initial breakout is. So I explained it. This is what the initial breakout is. And this is when you can be a little bit discretionary. At least this is when I am a little bit more discretionary with the entry criteria. Only when the higher time frames are amazing and it's a massive opportunity with a lot of potential. Not for 1-to-1, not for 2-to-1, not for 3-to-1. I will not lower my discretion level. I will not lower my entry criteria for a quick position for a 1-to-1. I will never do that, for a quick trade. And if you do, you're getting yourself into trouble, I will only lower my entry criteria from perfect to good, because this is good. It's a good entry. It's not perfect, but it's good, if it's a massive reward risk ratio, if there's just a lot of potential. And there was a lot of potential here. And in the next lesson, we're going to come back to this setup and I'll show you exactly how I managed it and the entry, the target, how I was planning to play this position. And we'll come back to it one more time in another lesson when we're fully talking about management, because there's many different ways of managing. And this is going to be a perfect example for that management lesson. So I will spend more time on this setup and a few other setups like this in the management lessons when they're coming up in the next few lessons here. So with that said, I'll leave you guys with this at this point. I'll show you one more example when it comes to the initial breakout setup, and it's going to be a swing play. It's going to be a swing example. So let's leave it at that and let's have a look at the next trade. All right, guys. So in this last example for the initial breakout strategy, the IBO strategy, I'm going to show you the swing play. How to execute a swing play based with this strategy. And guess what? It's the same thing. There's no difference. So the difference is that the swing play, you're utilizing the higher time frames strictly. You're mainly using the higher time frames for your analysis, right? So instead of targeting the daily run, we're targeting the monthly run. However, you can still execute this as a day trade, and I did execute this as a day trade myself because I'm not a swing trader. But some of you guys might want to be swing traders, so I'm just letting you know you can trade these strategies as a swing trader and have more free time, because as a swing trader, you wait for these massive opportunities in the market, You'll be waiting for them and waiting for them. When they happen, you execute, and in between, it's free time, whereas a day trader has to be a little bit more active, but you can trade this as a day trader as well, and I took this trade as a day trade, and I will show you in another lesson exactly the difference between how to really maximize these kind of moves with day trading. We already saw it in the previous example. The previous example, I showed you exactly that because it was very similar. The analysis started on the monthly to the weekly to the daily, right? And then execute on the 1 hour time frame, and I made 6%. And I also, in the next lesson, I will show you how much I have missed, which was a lot of profit. But it was very similar structure, monthly down, and this is an IBO on a higher time frames, so monthly, in this case, we believe that a run is happening. So strategy, first point for the strategy is what? We need to believe that a run or a pullback is happening, and we're right at the beginning, that a rejection of some kind of level is happening. So do we have it? Horizontal support and resistance in this area, we have it. It's the tops, resistance, and we got support. At the time of the entry, we had a double bottom, with this bullish engulfing. So that was the time of the entry. The time of the entry, we had a double bottom with this bullish engulfing. What was my target? The 50 EMA region. That's the target, Simple pull back up to the 50 EMA. Why the 50 EMA? Well, because every other lower time frame has that confirmation as well. And you can even dive into the quarterly time frame and notice that the quarterly chart even has a pretty decent setup as well. You can go, the quarterly time frame, that's as high as I would ever go myself, But I focus mainly on the monthly down, still look at the quarterly every single quarter, But this is where it begins. So the first part of the strategy is, do we have a rejection? Do we have a reversal candlestick? And we do. We do have support, we do have a rejection, we do have a double bottom, we do have a bullish engulfing reversal, Do we have room to go? We do have room to go. We have plenty of room, So criteria met. What about the weekly chart? Do we have confirmation on the lower time frame? Okay, so just like on the 4-hour time frame, with day trading, the 4-hour chart. In this case, it's the weekly chart, the middle time frame. Do we have bullish price action, some kind of bullish formation? We do. We have a triple bottom with acceleration to the upside. Okay, perfect. So triple bottom, acceleration to the upside. So monthly chart is giving us a double bottom, bullish engulfing. Weekly chart is giving us a triple bottom with acceleration to the upside. Great, that's exactly what I want to see. Now the daily chart should have a full trend change. The daily chart should be the break and retest of the 50 EMA. Just like with day trading, we're waiting for the break and retest of the 1-hour 50 EMA. This is the same thing. Imagine the monthly chart as a daily chart, imagine the weekly chart as a 4-hour chart, imagine the daily chart as a 1-hour chart. Same thing, just apply the strategy to the higher time frames, right? So the daily chart does give us a breakout and a retest of the 50 EMA. And it's a perfect breakout too. So you can dig right into this. There's another strategy, the advanced breakout strategy, which also could have been utilized over here, and I'll talk about that another time, okay? But here we go, so we have this pattern breakout to the upside. We have a massive breakout, which gives us a higher high. So previous highs, massive breakout, a higher high, first sign of a trend change, okay? Then we have the pullback and the rejection right here, okay? This is the entry. This was our entry. This is our rejection, So simply the trade happens right after this bullish engulfing there, targeting the monthly 50 EMA, which is up here, okay? Stop loss, well, you can have your stop at 0.618, make 3% on this setup, just like with a day trade, you would have your stop at 0.618, you can have your stop at 0.75, okay? However, with swing trading, there's an exception to the stop loss placement, okay? And here's why. Get used to if you're a swing trader, just get used to slowly checking the lower time frame. Because if you want to maximize on your returns, with swing trading, it is unnecessary to have your stop loss this far. With day trading, it's a must. With swing trading, it's sometimes unnecessary. Unless you're placing an entry order, which you could also do that. You could place an entry order and kind of move on with life. But I personally would just place an alert instead and wait for the entry to happen when it comes to swing trading. I wouldn't place an entry order with swing trading. I would just take the live entry. And the way I would execute it is literally, the daily chart closes as a reversal, take the trade right away. The daily chart closes as a reversal, take the trade. Okay? If it gives you what you want, it gives you a rejection, take the position. Okay? You can take it a step farther, and I recommend it. And it's quickly look at the lower time frame, such as the 1-hour chart. Do you have a trend change on the 1-hour time frame? And if you have a bullish trend change on the 1-hour chart, which you did in this case, because I took this trade, okay, you could tighten your stop loss to not below 0.618, but below 0.5, okay, or just below the previous lows, okay. So go below 0.5 kind of thing, nice and even number, whatever that is, 200 pips. Like that, and take your trade. So you can be a little bit tighter. You cannot do that with day trading, and I would never advise that. I would never do it myself. With day trading, having your stop below 0.5 Fibonacci is choking the position. There's a very good chance you can get stopped out for no reason. But because we're only on the daily time frame, we can just quickly glance at a lower time frame to see if there's a bullish trend which has developed. And if the answer is yes, then you can tighten up your stop loss a little bit more, because now there's more confluence on the lower time frames. The lower time frames have already started a bullish trend. And if that's the case, then you already know that a daily run has already begun. Okay, so you can have more confidence in the setup, and because you would have more confidence by quickly checking the lower time frame trend, you can tighten up your stop loss a little bit. And I'll talk more about this in the next lesson as well. But again, here's the strategy playing out, and it came very close to the target placement before massively crashing down. But eventually, you'll notice that, it retraced, and it eventually ended up going up after rejecting this daily 50 EMA to hit that level and break right through it, and you can see it on a weekly time frame. And when we fast forward on the weekly, you'll notice that we just kind of came back to reject the weekly 50 EMA and pop right back up, you know. And then on the monthly chart, there it is. We immediately just popped right back up. We even broke that level, you know. So you see how great these kind of opportunities are. And this trade, you know, with this stop placement option would have resulted in just under 5%. As a day trade, well, I personally made about just over 16% on this setup. I think it was closer to 17 on this trade. And I didn't even push it all the way up to the highs. I took my profit much earlier. I actually had a few positions on this setup, you know. And I made, by day trading these massive moves, we're gonna see in the previous example, when we go to the next lesson, I talk about the entries and the management of that previous example, which was a very similar setup, but a day trade, right? But with higher time frame confluence. With day trading, you can really maximize on your profit. And I have a fully dedicated lesson coming up in this masterclass that teaches you how to maximize your profit by utilizing the higher time frames, you know. So we're getting a taste of it here. But when it comes to the IBO strategy, it's here, it's present as a swing trade, you know. So there's no difference between day trading and swing trading in regards to the strategy, you know. The strategy is a strategy. All you need is 3 time frames to do your analysis and execute it, okay? So this is it, guys. This is the last example of this strategy 1 initial breakout. And I hope you guys understand it now. It's pretty straightforward, you know. It's just make sure you believe that a new run is happening on a higher time frame, and on the daily or the 1 hour chart, make sure you have a trend change, which is the break and retest of the 50 EMA, you know. And in the next lesson, we'll be focusing more on this and talking more about the entries and more about the management and the stop loss and the target. So that's coming up in the next lesson. So that's it for now, guys. Hope you enjoyed it. You're learning your first strategy now. So let's continue with the next lesson, and again, learning a little bit more about the initial breakout. See you guys there.